Hello everyone, welcome to the Stock Minds web channel. In the rapidly evolving tech landscape, Credo Technology Group Holding Limited, NASDAQ CRDO, has emerged as a standout performer. Specializing in high-speed connectivity solutions, Credo's recent Q4 2025 earnings report highlights its impressive growth trajectory and solidifies its position as a compelling investment opportunity. In this video, we will dive into Credo's recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Credo Technology. Founded in 2008 and headquartered in Grand Cayman, Cayman Island, Credo Technology Group develops secure, high-speed connectivity solutions that enhance energy efficiency as data rates and bandwidth requirements escalate. The company's product portfolio includes integrated circuits, active electrical cables, AECs, CRDO chiplets, and CRDO IP licensing, catering to the needs of data centers and AI applications. Credo's innovations are pivotal in supporting the infrastructure of major cloud service providers and hyperscalers. Credo Financial Performance. Credo Technology's financial performance in Q4 2025, which ended in April 2025, highlights its remarkable growth trajectory. The company reported revenue of $170.03 million for the quarter, marking a significant 179.73% increase from $60.78 million in Q4 2024. Earnings per share, EPS, also showed a strong turnaround, rising to 20 cents from a loss of 6 cents in the same period last year, a notable improvement of 433.33%. On a trailing 12-month TTM basis, revenue climbed 126.34% to $436.78 million, up from $192.97 million a year earlier. TTM EPS also improved dramatically, reaching 29 cents compared to a loss of 18 cents previously, reflecting a 261.11% increase. Profitability metrics remain robust, with a gross profit margin of 64.77% and a net profit margin of 11.95%. Additionally, the company posted a return on assets of 3.37% and a return on equity of 8.54%, while maintaining a conservative capital structure with a low debt-to-equity ratio of just 0.02. Over the past 5 years, Credo has grown its revenue at an 85.5% CAGR, while net income turned positive in fiscal 2025, marking a turn to profitability that is projected to continue in the future. Credo Fiscal 2026 Financial Forecast. Looking forward, analysts are optimistic, forecasting revenue of $796.47 million for fiscal year 2026, an 82.35% increase over 2025, and projecting a non-GAAP EPS of $1.44, which would represent a 105.25% rise from the 2025 figure of 70 cents. Reflecting this positive outlook, analysts have issued a consensus price target of $77.70, indicating an 8.04% upside potential, with the most bullish target reaching $94, suggesting a possible gain of 30.7%. CRDO stock price performance and valuation. Credo Technology's stock performance over the past year has been nothing short of extraordinary. At the time this video was created, the company's share price stands at $71.92, reflecting a staggering 185.5% increase over the past 12 months, far outperforming the S&P 500's 12.9% gain in the same period. Since its initial public offering IPO in January 2022, Credo's stock has soared by 542.7%, compared to a 34.8% rise in the S&P 500, underscoring its exceptional market performance. Despite this impressive appreciation, Credo remains attractively valued relative to its growth prospects. Its trailing 12-month TTM price-to-sales PS ratio is 31.75, with a forward PS of 15.22. The company's non-GAAP price-to-earnings PE ratio stands at 88.24 on a TTM basis, while the forward PE is projected at 52.72. Based on FinChat data, if we look at the valuation from 2024, Credo's forward PS is still in line with the average, and its forward PE is surprisingly below the average despite the stock's strong performance. These valuation metrics suggest that, although Credo's stock has risen sharply, it continues to trade at a reasonable valuation considering its accelerating growth, solid fundamentals, and promising future outlook. Credo growth potential. Credo growth prospect remains robust, driven by several factors. 1. AI and hyperscaler demand. Credo's growth is inextricably linked to the AI revolution, which necessitates faster, more reliable data transfer within and between servers. CEO Bill Brennan emphasized that hyperscalers, large-scale cloud providers like Amazon Web Services and Microsoft Azure, are driving surging demand for Credo's energy-efficient connectivity solutions to power AI services. The company's AEC technology, which replaces traditional optical cables with lower-cost, higher reliability electrical alternatives, has become a cornerstone of AI infrastructure. Credo's AECs offer lower power consumption and cost savings compared to optical modules, making them ideal for scaling AI workloads. In Q4 2025, Credo secured a significant design win for an 800 gigabit optical DSP with a U.S. hyperscaler, with deployments expected to begin in fiscal 2026. This win underscores Credo's technological leadership in optical connectivity, a market projected to grow at 8.2% CAGR through 2032, according to Fortune Business Insight. 2. Product innovation and market expansion. Credo Technology's commitment to innovation is highlighted by its pilot platform, launched in early 2025. This advanced diagnostic tool significantly improves the reliability and performance of high-speed connectivity solutions, a key concern for data center operators. By incorporating real-time analytics, Pilot helps reduce downtime and enhances network efficiency, setting Credo apart from competitors. Additionally, Credo is making strong progress with its PCIe Gen 5 and Gen 6 retimer portfolio, critical for maintaining signal integrity in high-performance computing environments. As the industry accelerates its transition to PCIe Gen 6 in 2026, Credo is strategically positioned to capture substantial market share in this rapidly growing $2 billion addressable market. These innovations underscore Credo's role as a leader in enabling faster, more reliable data center interconnectivity. 3. Customer diversification and supply chain resilience. While Credo's top customer, Amazon, accounted for 61% of Q4 revenue, management highlighted progress in diversifying its client base. 2 additional hyperscalers are expected to contribute meaningfully in the second half of fiscal 2026, reducing dependency on a single client. CFO Daniel Fleming noted that customer forecasts for AEC adoption remain robust, with multi-year visibility into demand. This diversification mitigates risk and aligns with the broader industry trend of hyperscalers dual-sourcing critical components. Despite concerns about semiconductor shortages, Credo has demonstrated supply chain resilience. The company maintains strong relationships with foundry partners, enabling it to secure adequate wafer capacity for its 3nm tape-outs. Ending inventory of $90 million in Q4 provides a buffer against potential disruptions, while $431.3 million in cash reserves offers flexibility for strategic investments. Risks to consider. While Credo's prospects are promising, we should be mindful of potential risks. 1. Intense competition. Credo Technology faces intense competition in the semiconductor and high-speed connectivity markets from established giants like Broadcom and MediaTek, as well as emerging players. This competitive landscape could pressure profit margins and market share, particularly if rivals develop superior technologies or offer lower prices. This could potentially impact Credo's growth and financial performance in the rapidly evolving AI-driven data center and connectivity solutions market. 2. Customer concentration and market volatility. Credo's heavy reliance on hyperscalers, a sector prone to cyclical spending, poses a risk if AI investments slow unexpectedly. Additionally, gross margin fluctuations due to product mix variability could impact short-term profitability. Tariff policies and geopolitical tensions also present supply chain risks, though Credo's diversified manufacturing footprint mitigates exposure. 3. Cyclical semiconductor industry. The semiconductor industry's cyclical nature poses risks for Credo Technology, with periods of high demand often followed by oversupply and price erosion. Economic downturns, or reduced demand for high-speed connectivity solutions, could negatively impact Credo's financial performance, potentially leading to revenue declines and margin pressures in the volatile market for AI-driven data center technologies. Conclusion: Credo Technology Group's exceptional Q4 2025 performance underscores its status as a high-growth company with solid fundamentals. The company's strategic focus on AI-driven connectivity solutions, coupled with its impressive financial metrics and stock performance, positions it as a compelling investment opportunity. While mindful of potential risks, the overall outlook for Credo remains positive, making it a strong candidate for investors seeking exposure to the burgeoning tech infrastructure sector. But remember, this is not a financial advice. What do you think about Credo? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.